Hi, this is Zak Mir with the US penny stock highlights for Thursday, the 16th of July. And apologies in advance today for the bumper selection, but there's one or two repeats which basically show off how well the technicals have worked over the last couple of days. The first one is Boxlight, where the shares are up 55%. It was covered, I think, yesterday and has hit the target, the nominated target at $4, the top of that broadening triangle from last July. Like we overshot up towards, I think, 460, 470, something like that. And I suppose the situation now is really waiting, apart from saying that's that, one would maybe wait to see whether there's a gap filled down towards $2.70 to provide an extra buy the dip opportunity for a return to $4 or $4.50 after that. Next situation is a new one here, and it looks quite encouraging, let us say, Chiasma. Here the reason is that we've bounced off the floor of this rising trend channel from November. Near term, we've broken a line of resistance from the beginning of the month, nominally, I suppose, around the let's say, call it the 440 level, allow for a stop down towards 435. Initial target, the 200-day line at $5. After that, the 50-day line at 580, but the big prize would be a move over the next month or so to hit the top of the rising trend channel from last year, and 2020 highs as well at towards $7.50. Stop loss at the moment back below the price channel floor at sub $4.10, but ideally we don't see the shares back below the aforementioned 435 area. Next contender is one that is also new to the penny stock highlights. Here we've got Elevate Credit, which has broken its falling wedge from the end of April. Did that around the, let's say, the $1.50 level. Currently hovering just above the 50-day moving average at $1.87. End of day close above this should be enough now to allow an initial move towards $3 plus, which is the 200-day line. And the best case scenario by the end of next month up to $3.70, which is that March resistance line projection. But the upside, obviously, depending on whether we can hold and retain the $1.50 area, only back below 130 really, and breaking that wedge on the downside would be outright bearish for Elevate. Another stock which is looking rather healthy at the moment is Antares Therapeutics. Here we've had a line resistance line, March resistance line break at, let's say, $3.25. Above that, we've already hit the initial target of the 200-day line at $4.17, but the big prize up to the top of that rising trend channel from the beginning of March, as high as $6.30 over the next, I suppose, 4 to 6 weeks would probably do the trick. Another stock which is new, a new name is Flexible Solutions International. Again, a triangle break, breaking also above the 200-day line at $2.07. End of day close above the 200-day line should be enough to provide momentum to allow the shares to make a journey up towards the top of that rising trend channel from January, as high as $3.60 or even $70. So that could be seen perhaps, hopefully, by the end of next month. Keeping with the new names here, we've got Biologics. Here you can see that it's quite an open chart here, quite a big mover, big expansive trend channel as well. The trend channel in place since January, that's heading towards $4. And that target really valid while we hold above former resistance at $1.80. I'll just show you where that came from. That was the initial 2019 high, so above 180, looking for $4 on Biologics. So a big target there, even though we've already had a pretty big move to the upside. On to another stock which is new to this space, and it's Itau Corpbanca. Here we've actually already had, I suppose the game was given away with the big spike for the shares on breaking that line of resistance from the beginning of March. The line broken at $4.44. Above that, we could still have a retest of the top of the March channel as high as $7.30. if you're cautious on the shares, maybe now you'd wait for an end-of-day close back above $5.10 and the initial June resistance before revisiting the shares for an upside move. Stop loss back below 450 and that March line, as is pretty logical. One of the big movers of the day, probably perhaps the biggest mover at the moment, is INNWorkings. Here, it's surprising that we've got a big percentage move. It was over 100% at one point. In fact, still is. But actually, we're still quite low in the in terms of the range that the shares have had. As you can see here, we came up from the sub $130 area, hit that target, or in fact exceeded that target there from the March resistance line projection, but we could still have further upside, at least up towards the 200-day moving average at $3.13. If we break that, then a whole new area of resistance as a target comes in up towards the $5 area. So let's see whether the shares can hold around the 270, 260 area of that broken resistance line. If we can do that, then there could be a follow-on move towards the $5 area. Another stock which is worth mentioning today, and quite seriously, is Martin Midstream Partners. The reason for that is we're just breaking this line of resistance from mid-April. That's nominally at the $2.10 level, so end of day close above that, or maybe better still, the 50-day moving average at $2.32 could take the shares up to the top of that rising January trend channel as high as $4.70 as soon as the beginning of September. Stop loss on the whole buy argument really back below 160 in terms of if it's below 160 we'd be actually turning bearish on the shares, but at the moment we are certainly pointing towards a break of 210 to 230, delivering a $4.50 plus target. We continue with Oblong, and here this is quite an intriguing chart in the sense that it took a few attempts to break that line of resistance from March, but that was broken at let's say the $1.70 level, and above that we're looking for the top of a rising trend channel from March up to the $3.80, 90 level, and perhaps even up to $4 by the beginning of September. Only sub 150 really killing the idea of further bullish moves. Just a few to go now in this marathon session. SenesTech, stock which is currently just attempting to break its resistance line in the triangle, I suppose, from mid-April. End of day close through 220 should be enough to put this into play on the long side and give us a top of February price channel target up towards the $5 level. Once again, that could be seen as soon as the end of August. Couple to go now, and the first one is Tiziana, which rather comically has been allegedly confused by some with a rather larger company called Tesla, just because of the stock code that it has. Maybe for dyslexic traders that's more of a problem, unfortunately. But current situation is that we're holding well above the old resistance from March at $7.75, also above that 850 area from last month, and at least while we're above 850, looking for the top of that trend channel from the beginning of the year, heading as high as $14. Going on to the last stock of the selection, and that comes in the form of technical communications. Here you can see that, or you will be able to see that the shares are also just about to break that line of resistance from December, line nominally at 390, so above that on an end of day close basis, and we could see the top of the rising December trend channel up to $8 or even $8.20 over the following 6 to 8 weeks. Stop loss here back really, I suppose, below the late or the initial July resistance at $3.50, so above $3.50, best case scenario target up to the $8 level. That's it from me today. More updates tomorrow.